Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, September 8th, 2016. I wanted to go over the shipping stocks in this video. I made mention in the trading room yesterday. I put up a few unofficial trade ideas. I made mention some that were breaking out in the shipping sector. Last week, I put together, compiled a list. We'll go over those today. It's about a dozen or so names that stood out to me. The shipping sector, before I get into the charts, let me just say this. I've traded these stocks for many years, and I can think of very few, if any, sectors where the individual stocks, once the momentum players engage that sector, where you will see such large price swings. And for most of you have traded GDX or Dust or Nugget, which are just 3-time leverage versions of GDX. I made mention of this yesterday. These shipping stocks are like trading the miners on steroids. So when they go, they really go. I mean, we're looking at, this is just one here on the top of the list. I didn't put this up for any purpose. That's the one I had up on the list I shared yesterday on the site. This is Starbulk, and you can see it's up 14.5% today. And it wouldn't surprise me to see this stock go up, or any of these names. I've seen these things run up 50, 100%, 200% or more, and we've had trade ideas on the site that have done that in the sector here over the years. So when they move fast, especially when the momentum players are in the sector. Point being, if you take these, keep that in mind. With risk, the risk and return go hand in hand. You have these above average return potentials. That also gives you above average loss potential. In other words, these things can turn on a dime when the momentum players decide it's time to get out and the selling kicks in. If you aren't comfortable trading a stock that can easily move up and down 15% in a day, then these aren't for you. With that being said, there's an alternative, the ETF SEA. For those of you that prefer ETFs because of the diversity that they offer, you have many different names. It's a basket of shipping stocks, and you also have the relative safety in that, because there's not any one name that's going to really have a huge impact on this ETF if it had a sharp down day, gap down large. So if you want SEA as an alternative, I haven't really finalized this chart here. I was out this morning for most of the day away from my desk, and just getting back in now. Actually, I would have done this video earlier. So some of these guys are already moving. If the trend continues, you can see the breakout here. Let me get this out of the way. This yellow downtrend line is what I'm watching. We recently had, as you can see, a breakout and a back test. These are old levels I have on the chart. I haven't updated this chart, but I could easily see this going up to 1240 if the momentum continues, and then we have another reaction high here in SEA around 13, a little over 13. And then possibly, if things hold up, the market holds up, the transportation sector holds up, then it shouldn't be a problem to see SEA all the way up here to the 14, looks like the 14 and a quarter area, sometime within the next maybe 6 months or so. Again, it depends a lot on what I mentioned. It'd be unlikely to see the shipping sector go up that much if the transportation sector is falling, which this is a component of. Transportation sector has shipping as one of the components, along with trucking, railroads, and airlines, etc. So there's C as an option, and I don't know if I'm going to put that as official trade idea. I may add some of these individual names that I put on this watch list last week as official trade ideas, and let's just go through those charts. That way you guys can pick any that stand out to you. So we'll go back to that Starbulk. It was the top of the list, SBLK. Well, when I added it, it was within this triangle. It broke out yesterday, as you can see. Big, large, very large symmetrical triangle. Beautiful pattern. And, shame on me for not getting this one out last week. But it's at my first price target right now. I had this horizontal line here that I created, and it's already reached that level. So that's the first target. There's a gap back there that defines it. These reaction highs here, and I expect at least a initial reaction there. But if and when Starbulk can take that level out, and especially the top of the gap, you can see the top of the gap back here, right around there. Uh, it's very thin here. What I mean by thin, look over here at these green and red bars. These are called the volume at price histogram bars that show where a lot of trades happen. So this is what we call a thin zone, where you see very few bars. So that my expectation is if and when that level goes, Starbolt can make a quick run up and to that level, and that's from where we're at right now. That's about another 85% gain. So that just kind of puts things into perspective, how much these guys can go, how much potential is there. And as always, like I say, things it can cut both ways. So I'll keep an eye on the sector. If and when I think any offer very objective entry, I'll add those as official trade ideas. Starbolt may need to come back in. And if it did come back in, either a back test to the triangle, again, assuming the sector is holding up, or this level here, there was horizontal resistance right around where the breakout was. I'll give you a level there. That's about, you want to say about 460. A pullback to 460, maybe just above that, would be an objective entry as well, because you have that horizontal support there. Former resistance becomes support, and then you could look for another punch back up to maybe the top of that gap area, close to that previous reaction high, which is at, let's get rid of that. Yeah, it's at 584. But ultimately, you'd probably want to just trail your stops up or raise your stops, and try to hold out for the big move on this one, because I can see the like I said, the momentum has certainly been coming into the stocks just recently. Like I said, I found them last week and they all started breaking out. Here's another one, the next one up, TOO, TK Offshore Partners, and another beautiful symmetrical triangle pattern. And just textbook action. See the impulsive move higher. You can see the volume bars are increased volumes, confirming nothing huge, but decent volume so far. And more importantly, two big impulsive green candlesticks that confirm that was a well-watched level and broke out. Unfortunately for this one, we're coming up to the target now. First resistance is at 672. Ignore these levels. These are old targets. We'll take these off. Get rid of these. But ultimately, this one, if the sector continues to do well, this line here at 777 is the top of this gap. That would be the next natural target. And that also comes in around, see this downtrend line here off the highs? I extended that out right here. So you have intersecting downtrend line and horizontal price or gap resistance right around that level. So again, you want to target the actual resistance is at 777. So an ideal sell limit, if you were just targeting that area, would be a little bit before, say, 772, 774, somewhere close in there. Now, longer term, if and when that downtrend line is taken out, you have a next resistance level. Again, these are just unadjusted price targets, meaning I set my price targets slightly below the actual resistance level. So you have resistance at 950, and then ultimately it's possible this one could head up to this 1350 area. Another thing to mention, I was planning on adding a lot of these as growth and income trade ideas. This is a dividend yield on this one. I haven't checked to see. Sometimes TC2000 can be a little off, showing a yield of 7.73. It's usually accurate, but you have to just take a look and make sure the dividend's secure. Again, you can do your own due diligence on these, read up on the fundamentals, because in this interest rate environment, especially when you see a beat down stock in a beat down sector, the possibility of a dividend reduction or elimination is always present. So just take that into consideration. But with that being said, assuming that dividend is secure or they continue to maintain it going forward, you're looking at huge growth and income potential on this one, TOO. So it's one of my favorite. DSX, Diana Shipping. I have this red basing range here. We've actually two ranges, but this looks like a level. We've had a lot of reactions at the top of this red box around 279, right where prices are trading now. So maybe a punch above 280. Let's see if I can add up some of these charts. I didn't completely annotate. I just kind of glanced and put them on the list. There's your safer bet. Wait for a downtrend line break. Use a log scaling on the charts and replicate this downtrend line off these reaction highs. Going all the way back, there's a gap right there. So there's your pattern. It's really a large, this is called an ascending triangle, descending triangle pattern. And you want to wait for a break of the top of that downtrend line there. and that would be your entry on DSX. Easily could see this one running up to the 350, then the $4 area. And long term, if the sector turns around, these stocks have just had the tar beat out of them in the last couple of years. There's a very thin zone, a very thin zone, I should say, very thin zone. A little bit redundant, but a quite large thin zone, I should say. Little bit of reaction I'd expect in the middle of that, but that does open the door if it gets up above there for a move all the way up here to $6. So you're talking, gain potential as long-term trades. Again, should this sector continue to hold up, and with the market holding up, the transportation sector, you're talking a double easily on your money here. That's about 117% up to that $6 mark. But near term, let's just look at these right now as trade ideas. Play them while the momentum's there. And how I like to trade these, again, I take a basket, a shotgun approach. I've scattered money among several of these names, and we'll add some more as they break out. That gives you the diversity. I won't put all my money into any one or two of these because it could really backfire on you. So I take that shotgun approach, and in watching, if a lot of these stocks are hitting key resistance levels all at the same time or around the same time, that is often my cue as to when to start booking profits or at least tightening up stops. Next one up, EGLE. This is a very thinly traded. This is only a $130 million company, so you got to be careful. But this guy's a rocket. I think we caught this ripping eagle, if I'm not mistaken, a couple months back earlier this year. I know I did personally, and it might have been an unofficial trade idea in the trading room. I believe it was. I engaged the shipping sector a couple times this year, and the rip on this was phenomenal. You can see that. And this just speaks to how much a low market cap, micro cap stock like this can move. There's a 714% gain over 20 days, or just 14 trading sessions. So again, 714%. And then back here, the stock at this point in time, let's move that line so I can grab the lows, experienced a 300% rip. So I think, and that cuts both ways. Let's talk about what the stock did after that 400 and something. Dropped 90% in just 19 sessions or 28 days. So if that doesn't impress upon, the importance of keeping your position sizes light, not letting your losses run using stops, if these things don't pan out, then I don't think anything does. But with that all being said, beautiful pattern. Here's a falling wedge pattern right here. I've excluded this one spike up. There's a horizontal resistance level at 1264, but this one's just waiting to pop above that downtrend line. Strong bullish divergences in place, and I would say this one very likely headed up near these two reaction highs right here, around 2230 or so. And again, if the momentum remains in the sector, it's done it before and it can do it again. You can see this sucker run all the way up, and return 3, 4, 5 times on your money if the momentum continues in the sector. But again, that's a low price one. A lot of these are, when I say low price, low price share price as well as small market caps. These are micro caps, a lot of these. TNK, this is one of my favorites. Beautiful bullish falling wedge pattern, confirmed with divergences here. You can see we had a divergent low back here, and that one we probably even had a wedge type pattern. Yeah, we did back there. And it may not look like much, but again, when you're looking at moves over here, that was for a quick 11% gain just from the break of the wedge pattern. If you look at the divergent low, it was quite a bit more. So this time around, another way to look at this, I haven't drawn it out here, would be to extend this divergence. This is really, these two divergent lows really make up one much larger divergent low. And that's what makes this time around, I think when this pattern breaks, it's going to be a lot more than what we saw here. It has the potential, I should say, to be a lot more. Got to be careful with these things, but big money in the shippers if you get it right, and big losses if you get it wrong. But again, this one, it just looks good all around. Look at the dividend yield of 9%. Again, I haven't done my due diligence fundamentally on any of these companies yet. You can do that, and I would encourage you to do that. But I'll also say this, that the market is pretty efficient at pricing things in, and if the dividend is going to be cut or reduced, it is likely already that's likely already been priced in. That's not a guarantee, but from my experience, more than likely, if this one has yet to cut a dividend and it plans to do so soon, or reduce a dividend, or eliminate it completely, that's probably priced in. So there it is, beautiful bullish falling wedge pattern. Needs to take out this trend line. A lot of you guys ask for levels. I can't give you a level on a trend line because trend lines are dynamic. Dynamic meaning the price changes every day. It comes in at lower and lower levels. So if we reverse here off the top of the wedge, come back in and then break out at this point, well, that's, that could be 3, 4, 5, 10% below where we're currently at right now. But as of now, as of today, we're at 279. If it goes much above that, let's say 285 or so, it will have taken out the top of that wedge. So as with all breakouts, you want to see ideally an impulsive move higher once a breakout occurs, and you'd like to see it on above average volume, at least 1.5 times the average 90 or 100-day volume. Targets, I think, it'd blow right through this level. First decent targets there around 330, and has a lot of upside potential. I'll have to study this chart a little further to give you a firm target. NM, this one I mentioned yesterday in the trading room, is one of my favorites. I mentioned it as breaking out too at the time, an objective entry. You can see there was the breakout yesterday. It was up, I think, about what it is today. It's up 5.5% today. I think it was probably up about that much yesterday. And I believe if I didn't put these up, these are the targets I just created. I was going to post this one, and I may still put that up. I like to the most objective entry was yesterday. It seems to be, it's walking away from that trend line right now, but there's another downtrend line, or I'm sorry, an uptrend line, which you can use as a stop. So what I really like about this, you broke above the yellow uptrend line. It's being confirmed so far with some impulsive buying. You have a couple stop options or add-on options. If it pulls back, it might want to backtest this yellow uptrend line. But to keep your stops a little more tight, you can put them just below this uptrend line here. So you have the yellow, I should say, downtrend line here. You don't want to see it fall much back below there. You also have horizontal support at about 97 cents. And 116 now, and it may not sound like much, but if you go from 116 up to 124, I have the actual resistance at 128. That's almost a 10% gain. But up to 124, that's still 6.6%. Not a bad gain, and I think it's very likely, if unless the sector just peters out, fizzles out, these recent breakouts, that this one's headed up here to this second target at 161, and you're talking a gain then of about 40% or so. And if it gets above there, there's a thin zone, and it can hit this level here. 252 or so longer term, possibly even this 326. So a lot of potential there. TGP, 4.12% dividend yield. Another one breaking out. We have some horizontal resistance here, defined by the bottom of this very large gap. It's tried to punch through a few failed attempts to break up and get into that gap. And when it finally broke below this, after that third failed attempt, it broke down, back tested this trend line, and boom, kind of fell down pretty hard. But now it has taken out this downtrend line. But to be safe, 1410 is that former level, and we had a few whipsaw, failed breakouts there. So if you really want to be cautious, play the safe side. You wait till that previous reaction high goes. But if that does go, you have this gap to be filled here, and I think these were old targets, so I would say that's probably set just below that level here. So the bottom of that gap was roughly, there's a little reaction below there, but you're calling it around 1712. I set the first target around 1696, and I think that's still a very likely first target at this point in time, and these are potential second and third targets. That's TGP, again, a growth and income play there. SB safe bulkers. This one I had trend line here 141. It took that out the other day. Big impulsive candlestick to break above it, and it's following through so far. Not screaming yet, relatively. I mean, it's up 6% today, but that's just run of the mill for these guys. But another dividend yield of 3%. So, like I said, a lot of these. This one, Nat, I've been watching this level here, pullbacks to this S2 level. I've had this S2 level for quite a while. Have produced. There was a nice trade to be made the other day. And again, it pulled back and hit that level. And now what it's doing, it's boxing in here, right here. We've sort of boxing in this range between, this is now, I should say, S1. It was former support. And remember, once support is broken, it becomes resistance. So now that level is resistance. So if it can pop above there, then this one should run easily up to here. We have a couple reactions right there. That's 1176. So that would be a move of about 7% almost. And then quite likely all the way up to here. A couple reactions. This would be the next target there, 1256. We traded this one as an official long trade, growth and income trade earlier. It was earlier this year or at the end of 2015. I can't recall, sometime in 2015. And it's got a beautiful dividend, almost 10% yield. Like I said, a lot of these are nice growth and income trades. GOGL, Golden Ocean Group. There's another symmetrical triangle pattern. Nice breakout and follow through so far. It seems to be flagging here. And I need to give you some rough targets. Certainly right here would be the first target, 486. You have this reaction low and these reaction highs. So you'd set your sell limit if you wanted to book profits a little bit below that. And if not, this one definitely has the potential to get up here and fill this thin zone. Once it gets above that level, you have a reaction here, a couple reactions along the way. But I mean, it's really thin all the way up here to this level right about here. So you're talking, if the sector is bottoming and you're looking at these as long-term holds or growth and income trades, I'm showing a dividend of 36%. I don't know if that's accurate. I imagine they're probably going to reduce that. Looking at what the share price has done, this is a $4 stock, but you can't beat that. But again, I would definitely verify that, and I would not bank on a stock continuing to pay out a 36% dividend. The market is pretty efficient. The only way it's going to let a stock yield that much is if there's a very strong likelihood that that dividend is going to be cut. Would be the only reason you're yielding a 36% dividend in a near zero interest rate environment. So either way, technicals speak the loudest, and this shows you a stock that may have bottomed, and at least it's broken out of this symmetrical triangle pattern. And as long as that holds, it looks good. GSL, I think I mentioned this one yesterday as well. It's another one I own. Took it on this breakout. This is, I think, one of the ones I mentioned in the trading room. Took out this 180 level, and it took out first, I should say, this big triangle pattern, almost symmetrical. But you can see that nice downtrend line was taken out. Then you had this horizontal resistance at 180, and first target is 211. And the next target is 249. Those are already adjusted. I started marking some of these charts up to put these out as official trade ideas. NNA, another beautiful, nice, big bullish falling wedge pattern. Confirm with bullish divergences or positive divergences down low. And we just need a breakout above that pattern, ideally on volume. Targets are unadjusted, that is. These are the actual resistance levels, 167. Then 198, and then if the sector still has some wind behind the sails, then 237 would be a potential longer term target. But I can tell you right now, this is my preferred target, the $2 level on. That's once again NNA, Navios Maritime Acquisition Corp. And OA, Nordic American Offshore. Little bullish falling wedge pattern. I don't have the divergences drawn out here, but we can do that for you and show you the divergences. And if it broke out, I would just say longer term, there'll probably be a few blips in between before it gets there, but this would be an ideal target, a swing target, 570. Set your sell limit orders just below that a little bit. Adjust it maybe down to 560, 558 or so. Don't try to cut it too close because, again, these are what I refer to as one of the favorite sectors for momentum players, and they're quick. And when they decide to book profits, these things turn on a dime. So I don't try to squeeze every last penny out of these, and that's why I'll set my stops a little bit below the actual resistance level. DLNG, another nice dividend yield of 11.33%. There's a nice downtrend line to watch. This might go back. Yep, it goes back a little farther. I just flipped to a 2-day period chart to be able to expand back 4 years in time. So you can see this nice downtrend line. Almost looks like a big inverse head and shoulders pattern. A little bit shallow on these shoulders, especially that right shoulder. But with that being said, it's has the same general what's the word I'm trying to use? Concept of an inverse head and shoulders pattern. You have a stock that appears to be bottoming, whether it's an IHS pattern or not. You certainly have a resistance level here, horizontal resistance. See, this shaded area is sort of the resistance zone that it's been failing at for a long time now. Failing here, failing here, failing here, failing here. So I love to see these patterns when you have horizontal resistance and downtrend line resistance that come in together at the same time. That leads for an even more explosive, or at the very least, a more reliable breakout, because those are dual levels. Some traders might only be watching this, some might be watching this. I'm watching both, and I can just tell you in trading, converging technical levels, support or resistance levels, breakouts of those levels, especially when the charts confirm, are some of my favorite patterns to trade. This one, why I can certainly see a reaction right here. I think that would be your first target around the 1742 area. I could easily see this one going up to the $21 area. To try to quantify that for you, stocks at 13. Let's just say you waited for a breakout here around 1567. You're talking a almost 34% gain up to that level. In addition to the fact that this stock's paying about over 11% dividend, just doesn't get much better than that. Again, all the disclaimers are thrown out in the beginning, so do your own due diligence. Don't fall in love with any one trade, and just make sure not to become complacent on your stops in case these things turn around and start going the other way. KNOP, not offshore, not one of my favorites, no pun intended, but a decent pattern nonetheless. This is an ascending triangle pattern. I talked about a descending triangle pattern on one of these earlier. So what you have here is the top of the triangle, the bottom here, and either way, this is certainly resistance, and that level's at right around $20. So break a little bit above $20 could definitely break this one out. Let's just take a look. I haven't really paid attention to a lot of the weekly charts here. I don't see a whole lot worth mentioning on the weekly chart. Again, another beautiful growth and income trade. So guys, I'm getting these out there for you. I can't possibly put every trade idea as an official trade idea on the site. I've mentioned this before. It's just too much work to post the charts, post updates on every time the target is hit, a stop is hit. It's something I do for the official trades, but when I come across a sector like this, they all look good. And again, I highly recommend a shotgun approach. If you're going to pick one or two, you can certainly do that. Just if you know what you're doing and you're okay with your stops, but at least sprinkle, your money amongst 4 or 5 or a dozen, or even whatever is manageable for you. I'll take up to a dozen names in this sector at times, and sometimes even more. But again, it depends if you're a full-time trader, if you are able to manage that many positions. And what I like to do is just allocate, how much money do I want, how much exposure overall to this sector. And then I say, okay, well, if I want X amount, then I'm going to have to take each position, a small fraction of that total amount on the exposure, so I don't end up, let's say I buy 2 or 3 of these stocks and that's already met my exposure, but then I love the charts on the next 4 or 5, I can't keep adding exposure. That's where you get into trouble in trading or investing, is overexposure to any one sector, no matter how good it looks. If that doesn't pan out, you can really quickly do some damage to your portfolio if you're, weighted, 50, 60, 70%, or 100% of all your money into one sector, especially a fast-moving sector like this. So GASS, Stealth Gas, let's see, I don't see a dividend up here, so this one may have been cut or eliminated recently. Either way, there was a downtrend line here it broke out of. You have resistance right here. You have another level right there. So this one has a little bit of work to do, but I think above that 405 level, it looks pretty good all the way up to right here. You can see these reaction lows come in perfectly at that reaction high. So a solid break above 405 is likely to carry this one up to that 525 level. And last but not least, HMLP, Ho LNG Partners, I guess that's how you pronounce that. 873, 8.73 is your dividend yield, so nearly a 9% dividend. There's an ascending triangle pattern again, defined by these reactions here. So basically a break above the top of that ascending triangle pattern, which is 1941. I have that line at. That could easily carry that stock up to, I would say, this 23.35 level. That would be my target right there. You can see the reaction highs right here. You can take a measurement of these patterns, a very simple but somewhat effective rule to measure how far a triangle pattern might go is take the widest part of the pattern, which would be right here. And you take that and you add that on to where it breaks out, and look at that. Coincidentally or not, that takes us right up to about my target. And I would, of course, I would certainly prefer to set my profit target, my sell limit order, a little shy of this resistance level and not try to eke out. This is just a rough estimate, these measured rules, these measurements. So it is interesting, however, that those sort of come in together, and more often than not, you'll see that. I'll take a chart, I'll put my price targets up first, and then I usually do the measurement afterwards, and it never fails to amaze me how many times the pattern projections line up almost perfectly with the price resistance. So there it is, and again, I'll try to get some of these out as official trade ideas, and until then I can tell you that I liked every one that I covered here, and if you take any of those personally, whether you're paper trading or not, let me know, and I'll be more than glad to put up a chart or give you some targets if I didn't cover those in detail already. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.